Ladies and gentlemen of the crypto space, we're live on a Tuesday, November 2nd at 11:56 a.m. A little late, a little busy today, but I've carved out some time. We're going to talkie about some stuff that's very obvious or should be very obvious at this point. This is not early cycle. The system collapsed in March of 2020. That was the bottom. It was very, very bottom. Everyone thought the world was ending. And since then, the system has been inflating and growing and expanding, and whatever fancy adjective you want to use to describe how we got from where we were to where we are. So I want to talk about the risks associated with activity or taking action in this current market, the current state of the market. You're buying something that someone bought for 90% less money. Take that into consideration. That's some serious food for thought right there. Let's pop it over to the main screen. Let's go through commentary today. Put a light on what I really wanted to talk about, but this broadly and generally speaking is a good topic to try and keep as an overtone to obviously the commentary interaction we deal with on a daily basis. Let's get over to the main screen. I got Spell up, obviously. This stuff is doing some crazy stuff today. Who's in? We got Dan's in the house with an extended time horizon. How late is too late? So this is exactly why I like this title of the stream today. So you'll never know how late is too late, but here's the underlying thing that needs to be considered. Someone bought CVX for $2, and they'll probably be selling it to people for 20, 30 bucks. And they're going to make a lot of money. So what does that mean? It means if someone who bought a whole lot, but then again, Tetranode bought pretty much right here. This is Tetranode's candle. So this could go way higher, but it could also get completely hammered. And then it'll take years to potentially get back to where it is. Things go down very quick and grind higher. Let's zoom out. Let's go out to the weekly. I mean, what would you do if you found yourself down to $3 and you bought a very large position here? So that's a shitty time horizon. You're talking about a long time to get back to where we are from where we were and where we could potentially be in the event of a deflationary impulse. So I don't have an answer, Dan. When is it too late? I mean, technically, it's never too late if you have a long enough time horizon, but most people can't sit on their hands for 3, 4, 5 years. Complicated stuff. Alex, ladies and gentlemen, the crypto space. That's right. Andrew, good morning. Alex, we only know in hindsight. You only know in hindsight how well or bad we did. That is the best answer, man. Dude, you killed that answer, Alex. Doopy's in the house. A pleasure. Crypto Bets in the house. Peter, yo, 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 yo. Scroll down. Cal, how are you? Hope everything's okay, my friend. It's been a bit. Killis, hello. Professor J, good morning. Noah, I noticed that Zapper has 677% APY for Ample. Well, that comes from Aave. So I've moved some additional capital in, as you can see, to Ampleforth. It's cranking out. 677. I'll show you. So it's 677 APR. But when you're talking about 677% APR compounded continuously, that's 87,000% on a yearly basis. Now, this is all made possible because the borrow side of the trade is significantly more lucrative. Significantly more lucrative that it makes 185,000% APR seem tame. Now, that's 752% APR, 185,000% APY. So you could literally double your money every week from the borrow side of the trade. At more than double. I'm sorry. You could get multiples on your money every week, but that requires work. I'm not really into that. there was a good example that I posted on the forum. Someone tweeted about earlier on how to do it. I myself have other things that I want to do, but that work that they're putting in facilitates the passive side of the trade. And the passive side of the trade eh, is a massive number, 87,000% compounded. And that's seems it's sustainable because people are borrowing because they're making a lot more than I am. If I'm making $1 million a year off 100 grand, it's way more than a million at this point because it's 80, 600%. All right, fine. But it's 600 grand compounded. You'd have to crunch the numbers. It's really big, but they're making a lot more. The point is, the borrow side of the trade makes a lot more than the lending side of the trade, and that's why the lending side of the trade is obviously sustainable. It's small compared to the borrow side of the trade. Fuber, good morning. Craig's in the house. A pleasure. Kristen, I thought I was too late on ICE a few months ago. No, you nailed it. If you got in a few months ago, where's ICE? I'm pretty sure. Nope, I have Ampleforth up. This looks like an inverse head and shoulders, but that's another story. It's going to get crushed by the rebase. So, I mean, look at this chart. It's a heck of a chart. Let's show you guys ICE because that thing is just going vertical at this point. Massive licks to the upside, sitting on $43.35. It's been a heck of a ride. Who else got in down here? That's all I want to know. I mean, who else got in at around like $3? That's crazy sauce if we get up to 80. 20, 30x on the money. Jay, can you explain the function of keeper? Well, I have a bit of a keeper position. Do I fully understand it? No. Do I like it? Sure. Has Andre been iterating on the user interface? Yes. Do I have some euros that I could claim? Yes. $342. How much keeper did I put in? Um, Vest. I put in 54.88 keeper a while back. I've lost some money on this, which was with $373 a piece. That's worth about 20 grand, give or take. I bought it for like 30, and it's only put out about 300 bucks. So it's not very lucrative. So as always, this is just a speculative play on Andre. So a lot of what we do in the crypto space isn't necessarily to directly make a gain, but it's a spec play on a meme or a personality or a person. I'm betting on Andre in this instance, and clearly betting on Daniel worked out big time, and that's the way this game is played. If you're the play on like sushi was turned into FTX when they bought it. The play on Ren turned into FTX when they had that partnership. The play on Rook and Keeper DAO is that the teams were always closely related. So that's how I found the best opportunities over the years in the crypto space. What's the better platform currently to stake stables, do you think? So with enough capital, Convex is the play. But otherwise, Curb's on every platform at this point. But with enough capital, the big money's on Ethereum L1. So anyone running around with a couple $100,000, you probably want to be on Ethereum L1. Albeit there's fun games to play, and you can really click trades through on other chains. But we want to trade less. Less is more in the crypto space, and it's not necessarily because of transaction fees. For me, I want to avoid capital gains. I don't want any of that to have to report. I just want income. An incomer. Let's see. Thought I might have been late getting spell at a third of a penny. Well, you did very well there. I did very well. Where's spell? Spell's here. Spell's at. You got a 10x on your money. So spell's at 3 cents. Pretty cool. Chart looks great. Riding the 10 SMA. Folks like Craig are like, what the heck? This is riding the 10 SMA in the 4 hour? It's just vertical on like the daily. It's above all the moving averages. This is like price discovery. The second it went onto FTX exchange, it was price discovery. 10 SMA on the 4 hour. That's just naughty because that's what it's riding it. It went below, it broke back above, barely broke back below, and now it's just bounce, bounce. Maybe we'll have a retest, go down to 0.32, and the directionality of the chart is extraordinary. Franco Die copying Frax emissions in AMM. Do you think they're ahead of the competition, Captain? Well, I think stablecoins are barely starting. I think this is the biggest opportunity in the crypto space. They talk about this from macro land, a dollar shortage, or so this is obviously why the big opportunities have emerged. Maybe psychologically, or maybe um, I can't describe it perfectly, but they always say there's a dollar shortage in macro land, and clearly that's why stables fill the gap very nicely. But that's in addition to the financial constructs that are profoundly novel in the DeFi space that don't exist in legacy finance. So, the dollar shortage in legacy finance is to service legacy debt. There's a dollar shortage in the crypto space. I mean, look, there's not enough MIM to be borrowed. There's obviously not enough DAI to be borrowed. So it's a shortage, and then and that means the system is primed for expansion, primed for inflation. And that's exactly why we see numbers or inflation, CPI, consumer prices, staples in particular, going up. The second you introduce more capital into the system, it just goes everywhere. It just spreads like wildfire, like a brush fire, because it's so starved for dollars in many regards. Um, I mean, come on. So with the gains that have been going on with Spell, you're telling me if Merlin and Daniel put 100 mil on S Spell on Abracadabra, that wouldn't be gobbled up in like 30 minutes or less. I know I'd probably take like a quarter mil. Lewis in the house, Noah's Pizza Shop, stake it to make it. Well, if you're not staking it, you're not making it. And if there's no income, what the heck are we doing? Are we doing the same thing that we did in legacy finance, or the same thing we do in the stock market? Buy low, sell high, paying the government capital gains tax? Or maybe are we treating it as income, which is short-term capital gains? It's a very similar tax rate, and depending on jurisdictions around the world, it may be better to file it as short-term capital gains, or it may be better to file it as income tax. Or for me, it's easier to file it as income tax, and I'll probably even pay a premium as compared to short-term capital gains. I just don't give a shit. I have no interest in a complicated tax reporting process, so I'd rather just file it as income. Um, Fascinating times we're in. That's really all I got to say. I'm at a loss for words a lot, at least today. John McGuire, hey, no, are we going to make it? I don't even know what Ample is. Well, you should, and you should never deploy capital to anything that you have no idea what it is. All I know is, second I put in an additional 90 grand, it was borrowed in like 5 seconds because people are making probably about 10 times this amount of money that I am, but I'm cranking out some nice returns here. It's going up by what, $60 I don't know. I would love to see this per hour. This has got to be like $100 an hour. If this is $100 an hour, it's 2,400 a day, but that's compounding. I mean, shit. If it was just 2,400 a day, not compounding, that'd be pretty crazy. But it's automatically compounding, continuously compounding. I think this is pretty cool. So don't put in anything that you could afford to lose. I'm okay. Just saying. I don't. I don't. I don't want to discourage people from deploying capital that they don't know what they're doing with it. You know. So please, John, if you're going to deploy capital to Ample, expect it to go to zero. And if it goes to zero, you should be okay. And if you're okay with that, go for it. Kill us. Ah. Alex, been thinking about that Ample strategy. Won't the APY go to zero once Ample starts having negative rebases? Yes, that is true. Crypt guy, morning. Good morning. John, I delegated my stake CVX to Vodium. Do I have to do anything other than claim rewards? No, that's the whole point. That's how easy it is. Just watch out for the volatility of CVX. It could get hammered pretty easily. It's up pretty high. I expect significant volatility. I expect the opposite of what everyone thinks. I'm a contrarian in many regards, so it looks good. And then it's going to look pretty bad when it's down at $15 or when it's down at $20. I mean, there's some serious price action ranges here, regions of price action congestion. Down at $20, it'll collapse to, down at 15, and maybe that $10 looks like is if there's a significant deflationary impulse, $10 looks like where it'll head. So if you're okay to lose 60% of your money, just remember that's always on the table. System gets hit hard, that's where it's heading, to price action regions of congestion. And you can look to some short-term moving averages to see if it helps. I don't even know what I have I have the SMAs on, but it's gone up so high that there is the short-term moving average. There you go. So you got a 200 SMA at about 17, a 100 SMA at 23. Let's go out to the daily. So there you go. 10, price action region of congestion that we saw in the previous Zoom coincides with about the 100 SMA on the daily. Okay, there you go. Food for thought. Food for thought. Malik's in the house. A pleasure. A pleasure. Gaurav, I made money in spell thanks to you. Should I keep it or let it go? Tough choices, my friend. Uh, Etienne, hello. Portfolio rebalancing when a small risky play gives a 10x is hard when that coin pays yield. Yeah, well, this is some of the toughest choices you'll make in your entire life. Do you want to sell something and pay capital gains? If you just turned $1,000 into $10,000 and you sell it, you're about to give the government about $2,700, $3,000, give or take. Bye bye. So you made $9,000 profit. There goes $3,000. Boop. Well, obviously that's the states, about 1/3, and that's from an income tax perspective. So I am just estimating. I have no idea what it is around the world. Just generally speaking, protection money, government protection money is about 1/3, isn't it? The Goblin MIM, UST, USDC. On Arbitrum is the play for stables. Beefy as a vault. Yay, love those beefy auto compounding vaults. Pretty cool. Kill us an incoomer. I am an incoomer. Booster in the house. Lewis, off topic, I have a hack paranoia. I know there are no guarantees. How do we know a given platform has the proper security in place? We don't. We don't, my friend. There's a lot of risk in what we do. Stick to the big names. Curve Convex. Aave tidied up shop with their exposure to X Sushi, which had a problem. Aave. The major protocols. Stick to the major protocols. The multi-billion-dollar protocols. And either they're not going to have an issue, or if they have an issue, they'll be covered by a massive corporation. Sushi, FTX. So I'm not too worried about any issues with like sushi. So don't you should be worried. OPSEC, operational security, should handle to the best of your abilities, but there's always just stay away from pinball coin, or I don't know. Stay away from the stuff that no one knows. Maximum risk. Stick with the brand names, and that's how you do it. Crypt guy, if you got into Ample on Abracadabra versus Aave, couldn't it be harder to liquidate down the line, less volume on L2? Well, there is no Ampleforth on Abracadabra, my friend. Booster, Captain, you saw that I bonds are paying 7% interest. Fed still saying nothing to worry about, only transitory. Really? How about that? 7%. Well, I don't know. What do I know about macro? Follow Luke Groman, Lynn Alden. They both say we're basically screwed with regard to inflation. Their tones have changed significantly over the last year, especially the way Luke responds to Lynn. It's pretty interesting. And I tend to agree with like Brent Johnson. I think a big dollar bull. But I don't think dollar bullishness is going to be what it used to be. I don't think it takes down equity markets. I think basically the dollar bullishness, because all the other fiats go to shit and all the other equity markets go to shit. So the rest of the world crowds into the dollar and crowds into the equity markets. So basically the U.S. stock market goes vertical. The U.S. dollar goes vertical. Um, Stock markets around the world pretty much collapse. Fiat fiat markets around the world collapse. Crypto markets are global, so crypto markets go absolutely astronomically asymmetric, vertical to the upside. It's going to be an interesting couple of years. There will definitely be those that are early. Doopy, how do I calculate how much 87,000% APY is per day? Uh, it's a lot. Who knows? All I know is I just watch the numbers go up. Is it going to load? Yeah, here you go. I just watch it go up. Just watch your numbers go up. Here's your balance. Watch your balance go up and enjoy your day. By the end of the day, you know, if it's not lucrative, like if you're putting in $1,000, it might not be lucrative, and there's real possibility that a lot of plays aren't incredibly lucrative, albeit time horizon makes 87,000% very lucrative. You just gotta forget it exists, and I clearly bumped up the position size, and I just find it fun to watch it go up. It's pretty cool. Um, Alex, if you end up with $1 billion in Ample, how would you move it without crashing the market? Use a broker? I don't know. Frankly, there's no way to get it out, in my opinion, using just a withdrawal. I couldn't get Ample out. I'm pretty sure I could swap it out, and that's what I was thinking about. So if I go here and I want to take out 10,000, I should be able to swap this out. I'm going to take a fat hit. So I'm going to take a 6% hit. Okay, go back. Come on. 10,000 Ample for GUSD because that's my fiat off ramp. It should work. Okay, cool. So I'm not quite sure how Aave's handling that behind the scenes. Isn't that interesting? But look, I could get Ample out. Swap. So I'll have GUSD. I'll have a GUSD. Food for thought. I'm pretty sure that'll work. It's not like the software's preventing me from doing it. But he can't withdraw. There's nothing to withdraw. 509. Because it's all been borrowed. So you can't borrow Ample, but you could swap your debt. You could swap your collateral for something else. Pretty interesting. Um, More lobby. I wouldn't make entries at this point in the cycle. Too much volatility. That's my sentiment. I would never buy anything this late in the cycle. Frankly, Ample is interesting to buy because if you look at the price, um, it's designed to be at $1. So load daily. So it's designed to not go up. So that's the thing. Most people buy an asset expecting it to go up. This isn't a stable coin and this isn't Bitcoin. It doesn't appreciate and it's not $1. So this is an interesting asset that's right in between. And that's exactly how Ampleforth describes their asset. What a fascinating asset. You're going to buy an asset that's not going to go up in price. And it's not a $1 asset, so there is volatility. It's a very hard asset for new entrants to the crypto space to get their head around. Because if you buy it at $2, the odds are your money's gonna get cut in half. The odds are, look, 178 right about now. The rebase is designed to push the price towards a $1.08. I could easily lose 30, 40, 50 grand. The rebase function is designed for my position to go down 30, 40, 50 grand. But bear in mind, the money market is brand new. So I find that quite interesting. And it's an experimentation. I want to play around with it. Yeah, mine, I could just sit on this for like 4 years and see what happens. It's another thing. Crip guy, Doopy get roughly 2% per day of your total ample units. That's right. Around 2% per day. So at 138, that's like, what, 2,400 a day? Hey, pretty cool. James, how do you feel about putting assets in Aave on Avex? It's the same thing as assets on Aave on Ethereum L1. We got worried about the cream hack. How do you get unworried? They removed XSushi, so they can't do it on Aave anymore. So XSushi is no longer collateral. So to alleviate fear, you want to do your own due diligence. Don't do anything you're fearful of, because if you're fearful of something, you will not stick to it. You will not engage with it for an extended period of time. If you define a year-long time horizon and you have fear, you're not going to be able to hit that 1 year time horizon. You're going to be doing moves, making moves in a week. So, food for thought. If you got fear, you must alleviate the fear prior to engaging in a position. John, how long have you been in the crypto game for? 2014, 2015, give or take. I mean, I remember 30, 40, $50 Bitcoin briefly. So I wasn't super early. I don't remember single digit Bitcoin, but I remember double digit Bitcoin. And I remember some of my original positions were like in the 200s, $200 Bitcoin. I remember selling Bitcoin for like 500 bucks. Yeah, I bought bed sheets with Bitcoin once, and I think those are $100,000 bed sheets at this point. It's been a long time. What was my first Dash? Mining Dash on Genesis Mining. I had so many. I was mining Digibyte in Orlando at 13 1080 Ti's hashing Skyne in Orlando. The air conditioning for the apartment cost $300 a month. No, well, the electricity for the apartment cost $300 a month. An apartment. I don't know what they thought I was doing. That was awesome. Yeah, I've had some interesting times in this experiencing and experimenting with these technologies. Zeke Girl, smash that like, people. You're getting free classes. 88 people in the stream, 26 likes. We can do better. Killis, thank you. Well, thank the Gob one. That's right. Gillatron, Time Wonderland is awesome. Yeah. Um, I'm not exposed to it just because I didn't get in early, and that's okay. And I don't want to be late. I'll catch a correction if it occurs, and I think Ampleforth is more suited to my sentiment at the moment. But I think Wonderland and Ohm and potentially some of the other forks, Klima, I don't know. We'll see what happens with the other forks, but there's something about building a treasury, and once it reaches critical mass, it could potentially be something very meaningful. And we'll only know in hindsight, as I always tell everyone, how it works out. But it could be very, very meaningful what Olympus Dow and Wonderland are building with regard to a treasury. This is a treasury of assets that's owned by a protocol. It's not a person, it's a protocol. So, what does that mean? What does it mean? We won't know until it plays out. And I think it's meaningful. I think the risk free premium on Wonderland is quite interesting. I very much look forward to any corrections in the market. I'll buy at $1,000 if time goes back to like 1,500 bucks. Big deflationary impulse, but I'll sure as hell be buying because it's backed by a treasury balance, $250 million worth of assets. Yeah, I'm going to be buying. I don't know anyone who wouldn't buy an asset that's backed by $250 million worth of assets. So the backing per time, that's quite fascinating. These two parameters right there are downright fascinating. I'm just not going to buy at a premium. I had a chance to buy super early, but I didn't, not because of any particular reason, just because I didn't take advantage of an opportunity. And I don't want to buy in late. Whereas there is no late for Ampleforth. It's up and down. That's just the nature of the asset. But there is a late for Ohm and time. I'll get my time with the asset. I'm sure we'll have a deflationary impulse at some point. But in the meantime, 69,000% is designed to compensate for a deflationary impulse. If you got in at $1,000, $2,000, you're up at $7,000. You're borrowing against WS Ohm. I'm borrowing against W Memo on Abracadabra on Avalanche while cranking out 69,000%. So you're borrowing against an asset that's yielding 69,000% APY, and maybe you're collateralized with a 10% LTV, loan to value ratio, and it gets hit 50%. You're not going to get liquidated if it gets hit 50% and you collateralize that 10% loan to value. And to top it all off, you're still compounding the crap out of your W memo at 70,000%. Downright fascinating. So I'd rather be early than late. See, food for thought. I'm just not buying it because I'm not early. I don't want to buy things and be late. I want to buy things and be early. Because someone who's early is going to sell to someone who's late. And I'm not that guy. Maybe in 17 and 18, I was a little late on some stuff, but I'm much more experienced nowadays, and I'd rather sell to someone who's late than be the person being sold to or some shit like that. So don't be the one who buys the bag and holds the bag this time around. Most of you guys are pretty damn early in a lot of these assets, and I'm not going to be selling really anything. Maybe I'll be taking some profits, but I don't think I'm going to be selling much if we have a significant deflationary impulse, because I know where this whole market's heading. Ryan, hello Noah, glad to be a part of this journey. It's a pleasure, yes indeedy. Taylor, about 1.8 to 2% for Ampleforth on the daily. Pretty interesting. Yeah, you're making like, I think it's 5-10% on the daily with the positive rebase borrowing. It's a multiple of that. Um, Stuff late to the stream. Wonderland been dealt? Has Wonderland been dealt with yet? Well, I wasn't really going to talk about it specifically, but Wonderland has come up today, including Olympus Dow. Not much else. And Ampleforth I discussed. APY, not APR. The APR is about 670%, give or take. So there's the distinction between rebase has been more than the APR. Yes, of course. Yes, exactly, Taylor. The rebase has been more than the APR and the APY for that matter. But that's the point. That's why the interest on your lended capital, your lent capital is sustainable. They're making more money than they are paying you just to sit back and relax. I mean, I got my kids that come home at like 3, 4, 5 o'clock. I have work that I got to get to when I get off the stream. I don't have time to be watching the rebase. That's bedtime. So I much prefer the passive side of the trade. I don't have time for the active side. So are you losing your fraction of the ample market share when it's a positive rebase? Well, yeah, but typically um, it's just passive versus active. That's the way my mind reduces it. Doopy, what do you think about ALCX? Auto paying loans are pretty cool. You could do that in Abracadabra also. Thoyo, totally unrelated, but my helium miner just arrived. That's pretty cool. I have a bad feeling I live in a terrible location for awards, but I'm still excited. Oh, that's cool tech. Cool tech. No horns, no tail. Do you receive ample to your wallet when the market cap inflates? Well, a positive rebase, yes. If you're holding ample naked, you are exposed to the positive rebase. So yes, it just expands. So technically, your wallet doesn't. Now you got little semantics in how you describe how you receive assets. You don't have anything in your wallet. Your wallet doesn't contain any assets. Your wallet tells you how much of an asset you own, but that asset quantity is in a smart contract. Um, so technically, it's called a hash map or a collection. So all the Ampleforth contract does is adjust everyone's balances in their account's hash map, which is pretty cool. That's generally the way it works. Um, Taylor APY divide 100 add 1 power, something like that. Lenders do not have their wallet amount increase decrease when there's 100% utilization. That's exactly right. If there's 100% utilization, you're just getting 87,000% on X quantity of assets. Whatever is not borrowed, it does get exposed to the rebase. So the rebase amount goes to the borrowers, not the lenders. That's right. The opposite in a negative rebase market. Spot on. Spot on. Brian, Raul, Z Girl. Yeah, I haven't had time for office hours. I'm sorry. I wish I did. I'm doing more of this Ask Vid. So throw up some questions. I'm more than happy to help the best I can. 1, 2, 3, 4, 5. I have 5 questions I got to get to. There's a lot of videos in here. I don't think a lot of people know that I have this, but I put it in the commentary for the stream, in the YouTube comment, the YouTube description. I put my profile. Maybe I should put the individual links, but I have my Ask Vids where I help people the best I can. Anthony, with ample stake on Aave, does supply contract expand with the market contract? No. Well, yes, if for the unborrowed amount. If it was 100% borrow, no. Ryan, I'm thinking about Ample, one of the first token I ever bought, but never understood. Thinking about going into it again, but I need to know where to buy because Ethereum gas fees are just bad. You want to buy at the rebase target, so you want to buy at $1.06, and it hasn't been $1.06 in quite a while. No, it was $1.06. But this is probably about when the Aave money market was launched. I think the dynamic is going to change significantly. You can't just have the launch on a money market and have the dynamic stay the same. This is the first time there was a big rebase and it just pumped right back up. We can see some new price action as compared to what has historically occurred. This is obviously initial launch aberration, but closer to $1.06, the better. I believe so. There's a lag between the daily rebase and the sexes and the dexes. That's right. Um, Ryan, Noah, you are a scholar and a gentleman. Thank you for great content as always. You're very welcome. I hope it helps. It's not perfect always, but I'm pretty consistent in delivering some message on a daily basis. Smiling in the dark. What draws you to Ample? A lot of folks don't look too much into it. This is a very small position of mine. I'm still a curve maximalist in many regards. I'm an incoomer. Incoom. I want cash on a daily basis. But what I like about the ample position is it seems like a passive play to me, meaning if 100% is borrowed on Aave, I'm getting 87,000% APY, compounded 870% APR on X amount of dollars. Great. If I could turn whatever my deposited into X amount of dollars on average, that's a win. Do I expect probably a couple of negative rebases between now and then? Yeah, why not? But it's the same thing with like Wonderland and Olympus DAO. Even if there's a depreciative cycle, the return over time will compensate for any loss of pie share, so to speak. So this is new behavior. The reason I've recently re-engaged with Ampleforth is because they just got onto Aave, and this is new behavior. It historically didn't exist. Historically, it was just work where you actively managed the position and you were trying to finagle and capitalize on the rebase. And that's not something I'm interested in. I don't have time to do such work. I just want a passive position. And being able to provide liquidity for other people to do work offers me that passive position I've been looking for while being exposed to a very fascinating asset. So that's the deal with the asset. Keep your eye on Temple. Yeah, you keep talking about Temple, my friend. I got to get back to work and finish a merge request and get a new product out for business. That's another story. I'll keep an eye on it. I'm tempted. I don't have time to, or really any capital I want to expose to risk at the moment. No new assets is probably the best way I'm thinking, or the best way to describe the way I'm thinking. I can't get into another asset because that means I have to absorb it, digest it, assimilate it, and make it part of my mental processes that I think of. And I'm not prepared to take on another asset. I look to concentrate as much as I can. Less assets are easier to manage. Thoughts on B protocol? I don't have an opinion. I'm kind of new to DeFi, so I'm still struggling to understand why Olympus is a good investment, but Iron Titan wasn't. If you are new to DeFi, don't touch any of that stuff. You should be digesting 30% yield on a stablecoin and figuring out how to save your money. The most important thing that everyone doesn't do when they get into the crypto space and the DeFi space, is they don't fix their fucked up management of money. Most people have no idea how to save money, spend less than you make, accumulate capital, because 30% return on stablecoins changes everything. Now, having a structured portfolio is probably the next step. The vast majority of your capital accumulating and saving at a relatively high interest rate is being the core of the portfolio. Then you learn how to take risk with 1%. 1% of the portfolio turns into 10% of the portfolio. It changes everything. And then you could expand out to have, 50% of the portfolio is a core savings account. The other 50% is risk assets, and maybe 10%. 10%, 10%, 10%, 10%. So in 10% chunks of the 50% of the portfolio allocated towards risk, now you have five risk on assets. And now you're thinking more along the lines of how to structure a portfolio strategically, with portions of the portfolio allocated towards risk and other portions risk minimized, stablecoin positions that being. For me, interestingly enough, I consider this Aave play the savings. So I've been taking like stuff I've been carving out for dollars and just kind of throwing it into the Ampleforth position. And we'll see how that works out. I'm not too worried about losing capital at this point. Um, Someone asked me early in the stream how long I've been in this game, and it's just up so astronomically uh, that I don't mind even taking on a little bit of risk with the risk minimized part of my portfolio. Um, we'll see how it plays out. I'll only know if I'm making the right decisions in hindsight. Food for thought. Um, let's wrap this up in a couple minutes, but I want to hit everyone's questions. Ravi, thoughts on Spirit Swap versus Joe? So I have a decent in Spirit position that I've had for a while. It's up like 5, 6, 7x on the money. I like X Joe. It's just something that I'm not exposed to. The captain is in the house. Hello, my friend. I hope everything's okay. Let me know if you need anything. Caleb, Noah, you catching frog radio? Oh, hell yeah, I'm catching frog radio. I gotta see what's going on with ICE. I mean, Daniel's just killing it. The whole ecosystem's killing it. And if ICE does what I think it's gonna do, it rips like a 20x on the money, and I'm able to get 30% revenue. It's probably going to be more than 30%. But if I could get if ICE rips 20x on the money, and I could get 30% APR, oh my god, oh, that'll just be crazy. Um, Ryan, any suggestions on who to follow and how to be ahead of the curve, just like you? You will be that person in 5 years. You will be the person ahead of the curve. You're just late. This is a market. It's 2021. This market's been going on since 2009 in cycles and in waves. Stories to be told about the different time periods And not just the bullish parts of the cycle. The bearish parts of the cycle tell a story and how the crypto space fits into the macroeconomic cycles. You will be the person with experience in 5 years. You'll be me. It's just time. Watch Real Vision. Real Vision's a big deal to understand the crypto space. And I'm not talking about the crypto shit on Real Vision. I'm talking about the macro stuff on Real Vision. You got to understand macro to even begin to understand crypto. What do you know about inflation, deflation, velocity? Got to understand what the Fed's doing, why they're doing it. In Coomer, smiling in the dark, and in Coomer. John Berg, your big picture macro view is helpful for newcomers. I hope so, because the only way to really understand crypto is macro. Umberto, hey Noah, can you tell us a little more about Keeper DAO? What has made you reinvest in this project? Well, it's a very small allocation, and Keeper DAO has a burn component now, which they historically didn't have. They're an MEV capture project protocol. They're capturing capital from that's typically extracted by front runners, sandwich bots, and all that stuff. And they're preventing that from happening, and they're capturing that and putting into their treasury. They have 100 mil treasury. They're buying 40 mil worth of CVX, and they've said anecdotally that they're going to focus on monetary policy to turn it into a productive asset. That's it. Small position. I don't think it's going to run multiples in the short term. And maybe in multiples, maybe you hit a 10x. So if you throw 100 grand in, you get an extra mil out of the deal. I don't see it. I mean, it's a great position technically, but historically it hasn't run significantly, and it's been a fair amount of time. Listen, it's hard to buy things and not expect them to move, and then when they move, it's satisfying. And then you have the opportunity cost. Like if you buy this because the technicals say it looks really good, you're about to have a bullish cross of the 50 SMA, the 100 SMA, and the 200 SMA. That's pretty bullish. A 50 SMA, 200 SMA bullish cross is a golden cross. And if you don't expect this to appreciate significantly, and it does, then it's a big win. And if you expect it to appreciate significantly and it doesn't, and it's disappointing, means you're probably overexposed to the position. You had too much of it. You allocated too much to it. And that creates opportunity costs where you're missing out, where the capital would have been better deployed to another position. Complicated choices. So hope that helps, Umberto. Alex, would you ever quit your day job? No. I would always have a day job where I could try and help a company or someone or do what they want to do, like startups. I like startups lately. Gaurav, is crypto 100% engagement? No, I work. I have a job. I program. I'm an Android engineer for the last 50,000 years. I've been an Android dev since 2009, pretty much when Bitcoin came out. Um, I've written so many apps. If you ever go to Universal Studios with an Android device, and if you ever use the mobile food ordering system on the Android app for Universal in Florida, I wrote that. That's pretty cool. I've written a couple of things over the years. Anyway, um, Taylor, have you got any recommendations on people to follow? Did I answer that? I have more time to try it. Yeah, well, do Real Vision. Real Vision. Uh, follow Luke Groman, Lynn Alden, Raoul Pal, and I don't want to burden you with the contrarian ideologists because they'll just confuse the crap out of you. But Real Vision has some great macro content. Very frankly, it has the best macro content. Zach, I'm way too spread out. I feel like I don't have time for anything. Yeah, you're never going to be able to manage it if you're way too spread out. That's why you got to concentrate a bit. And that means you have to really have a good sense of where you're concentrating to. Thelio, you're welcome. John, have you looked into how Curve V2's pools work on a contract level? Yeah, they basically have infinite liquidity at any particular price point. Uh, so the way the algorithms work is they produce ultimately charts. Reminds me of my old calculus days. And the curve V2 is extraordinary, whereas Uniswap V3 can simulate curve V2. Curve V2 just works, and it's super simple. So if they expand like try crypto versus other assets, and they start pairing off things like 3Pool did, um, curve V2 could explode very meaningfully. There we slap on a UI refresh. Woo! Pretty interesting times ahead, in my opinion. Looking to take 5% and put it into Rook is pretty interesting after doing more research yesterday after your stream. Oh, that's your choice. 5% is a lot. 1% of a portfolio turns to 10%, and that changes everything. So 5% may be a lot. But then again, only you can know if it's a lot or a little. It's a subjective choice. Tricks boy, would you invest a mil portfolio the same way as a 10K portfolio? No, I wouldn't. And I'm not going to get into how I'd invest a 10K portfolio right about now. It's late in the stream. Oh, we'll talk about that another day, how I'd invest a smaller portfolio. Hard choices. And it's a hard world. Inflation is pretty scary right about now. Anyway, I don't want to digress too much, and I don't want to go off on too much of a tangent. Mike Pye, a pleasure. Umberto always helps. You're very welcome. Thoyo, Android, FTW, fuck the world. Yeah. Never owned an iPhone. Yes, I'm an Android guy. I got this cool little the Samsung, the Fold. This thing's cool. Concentration is a tough one for me to learn. That's right, Mike. It's not easy. And concentration when you're late is devastating. Like if you buy Curve, let's say Curve goes to $30 and someone buys at $30 and it crashes to like $10 or $8. That's devastating. And that's the burden that I think a lot of people are going to find themselves in. And that's the same thing that happened back in 18. End of 18 and 19 was just pain the entire year. So it's a different story this year. If we go to $30 on Curve, we started last year at 30 cents. So anyone who bought in at $1, $2, $3, it goes to 30, and then oh, the horror, it goes to $8. Oh, the horror! It crashed to $8. For us, who were in early, no one really cares if it crashes to $8. We see it up at 30, we're like, oh my god, you never have to work again. No, it crashes to $8. We're still like, oh my god, we're pretty damn good. We probably still don't have to work again. So that's what I think is going to play out. When I tell folks it's different this time, it's not different that this shit's going to crash and it's going to crash hard and people are going to get nailed. Like spell, maybe it goes to 50 cents, but if it crashes to 10 cents, everyone who listens to me bought it when it was a penny or a fraction of a penny. So it goes to 10 cents. That's 1,000 times on your money. But if someone buys it at 50 cents and it goes to 10 cents, they just lost everything and it's devastating. So that's the difference between being early and being late. And that's the meaning of the yield this time. That's the meaning of the monetary velocity. That's why it's different this time. The folks that are early just have no need to do anything. They're just up so many multiples. It doesn't matter if it comes down. It's a fascinating thought experiment. If your time horizon is beyond 1 year, we are all early. I do it a little bit more. I do it about 3 to 5 years. Caps, or your art retweet of Portugal narrative. Is this something you would consider for you and your situation to help get back more protection money? No, I'm not moving to Portugal. I stick to Florida. No income tax at the state level. and I'll handle things the best I can. Anyway, everyone, thank you. It's a pleasure. Tuesday, November 2nd at 12:50 p.m. As always, tell everyone to subscribe. It's only Tuesday, so we got Wednesday, Thursday, Friday. So I'll catch you tomorrow. I look forward to it as always. More questions. After party on Discord. Don't forget about AskVid, and I wish you all a good day. I'll see you tomorrow. Peace.